Well, despite today's jobs report coming in a little lower than estimates, most economists believe the labor market does remain relatively solid. However, there are a few factors that could change that equation, and here to help us outline some of them is Guy Berger, Burning Glass Institute Director of Economic Research. It is great to see you, Guy, and I really appreciate you joining us. So I guess there are a number of different categories we can look at that we should be watching going forward to potentially create some noise in the jobs report. And I want to start with what is going on the government level, actually, and the efforts of DOGE. Now, when you look at the government additions to January's employment report, you saw 32,000 jobs added. What is all of this, the potential buyouts, the cuts? What effect is that going to have on job growth and potentially economic growth eventually?
Well, it depends on how much happens and over what time span. And I think it's a giant question mark. I mean, if this turns out to be a situation where essentially a lot of government workers relatively quickly find themselves out of job, and we're saying a lot, I'm talking about numbers in the hundreds of thousands or heaven forbid, millions. And then on top of that, we're also talking about potentially cutting back money that supports all sorts of private sector jobs that the government's funding. Then this could have a pretty big dent on economic growth, on the employment data, especially if it happens quickly. And I think the big question mark is this going to happen at what scale, or is this a bunch of cosmetic targeted things that are relatively small ball and don't make a difference at all? I think it's very uncertain at this point how far this is going to go and how many people it's going to impact. But it could be material if it happens quickly on a big scale.
I'm just curious, Guy, because you've been doing this for a while. How difficult is it for you to actually make forecasts right now? It's obviously always very challenging. You're always, as an economist, you're balancing all kinds of variables. But right now, I mean, we were just talking about DOGE. Maybe there'll be spending cuts, maybe not. If you were on just a few days ago, Guy, there were massive tariffs, but then maybe not. I mean, is it more difficult than usual for you as an economist to try to forecast this?
Yeah, it is, because we're talking about big changes, which may or may not happen, may happen at different times. We don't know when, and some of them are offsetting the effects of the other ones. I think, you can talk about how difficult it is for me, but when we listened to Chair Powell last week, that was a lot of it. Is he says, we can do our forecasts, but he didn't say who knows, but I think that the subtext was, until I know what's actually going to happen, it's very hard to predict what we're going to do and how we're going to react to it.
Well, Guy, I'm going to ask you about a couple other variables that are tough to predict right now. One of them has to do with another effort by the new administration to deport illegal immigrants. As you know, immigration has been a huge factor in the job growth that we have seen. So what are you watching? If you don't yet know what's going to happen, what are you watching that will help inform, your forecast and let you know what's happening?
Yeah, I think the first thing is, I think it's, there's so much focus on flows across our borders, particularly the southern borders, which, by the way, have slowed substantially in the past 6 months and may already be starting to filter into lower employment growth. But beyond that, I mean, honestly, I'm looking at visas and how many of those are being issued. They were running at fairly high levels during the last administration, where there's efforts to reduce that. We will see. I know it's been a hotly debated topic. I don't know what's going to be implemented here. I think the way I would think about it is there's two things. Even without deportations on a large scale, just the fact that we're letting fewer people in is going to slow monthly employment growth, probably slower economic growth, but may actually not have much impact on how tight the labor market is. There are going to be fewer new people coming into the economy looking for jobs, and it might be able to have, that essentially are looking for a job. Things get easier. The job market gets tighter as labor market gets more scarce. And then on top of that, we were talking about the layoffs. Potentially and buyouts coming to the federal government. If we do see deportations, on what scale do they happen? How quickly do they occur? It could be one of those things that happens at a fairly gradual pace and essentially, causes some dislocations, but not on a large scale. It could be that disrupts a bunch of sectors all at once, and employers are suddenly scrambling desperately to find people to do the jobs they rely on, foreign-born residents to do. And I guess I have huge question marks, but I am pretty confident that this big wave of immigration we saw is not going to be repeated over the next 4 years, even if there are no big deportations, just because fewer people are going to be coming in.
Let me ask you, Guy, about inflation, because it was interesting that in that jobs report we got this morning, there was that hotter wage number. And then, of course, Guy, you saw that the sentiment data we got, which I think threw people for a loop. That was a big headline. You add that up, I mean, the trajectory of inflation looks like what to you next 6, 12 months?
Well, I always caveat this with the fact that I'm a labor market expert and inflation dilettante. But listen, my opinion is if the labor market stops, I don't think the labor market has played a big role in driving inflation, so driven by other stuff. But if the labor market heats right back up because we're making decisions that constrict the supply side via the labor market, maybe through tariffs too, and then on the flip side, we have big tax cuts that essentially like boost demand and in terms of people's spending power. I mean, that pushes the meter a little bit toward more, not less inflation. I think it depends. If you lay off a bunch of government workers and do nothing else, that actually reduces inflationary pressure. I think that's sort of the giant question mark is like your uncertainty over inflation, which is already pretty high based on the experience of the last few years, should be even higher over the next year or two than it has been. But if I had to guess, I think the balance of policies that seem most likely to happen are probably a little bit more on the inflationary side and less on the disinflationary side.
So, Guy, let's get back to something else that could change, if not harm, the broader job market. Another factor that doesn't really have as much to do with policy, and that is the rise of AI. There's been a lot of debate about what kind of effects we could potentially see. We have seen anecdotally some firms, at the very least, redeploying, laying off some folks, hiring AI sales force, for example. How are you thinking about that issue?
Yeah, so first we have this wonderful census survey, this amazing government data that we have that we're so fortunate to have because of our government statisticians that collect every 2 weeks, ask U.S. companies a lot of things, including have you used AI recently? Are you planning to use it? And we've seen that creep up. There tends to be heavier adoption among bigger firms and among smaller ones. We are seeing adoption go up. I'm guessing that a lot of it right now is workers automating certain tasks. In some cases, it really does impact certain jobs specifically that AI can do very well. But, the technology still has limitations. I think it's a story that's going to play over a long time. Do I think this is significantly across the span of the economy reducing employment right now? No, not at all. And it could be a long time. And there are going to be new jobs that are created probably because the technology creates new opportunities for people to do things that didn't previously exist, a lot of which are not going to be tech jobs.
So so that's an interesting idea. Where would those jobs be? Because I was going to ask you what sectors you think might be most affected.
Well, if you think about sectors that are most affected, I think information services is where it is. And I think that's where adoption's been the highest. And that includes, by the way, not just tech. Tech firms are already using this technology pretty heavily, but also traditional media. You have more, this is debated how much people like this or not, but, a lot more writing is now done by AI or supplemented by AI. It's being used in that kind of sector. So I think those are where things are being felt. And the question is, does technology's capabilities and adoption expand to other areas? Are there other what we always think about as like routine or repetitive knowledge work? Or a place where you have hired an intern that you're going to use this technology. And I think this is going to be gradual as people experiment, but it is happening and becoming more widespread, at least in a shallow fashion, as we speak.
Guy, great to see you. Great to have you on the program today. Thanks for joining us.
Thank you.